Amazon has released their fourth quarter earning results, and we are going to be going through those numbers right now. We can see the market is not liking what they're seeing right now. It's down 4% after hours to $107 a share and 80 cents. They had a good run up today, up 7%, but now they are down almost 5%. So what we're going to be doing today is going through these numbers, seeing why the market is not liking what they've seen, and then we're going to be looking at my stock valuation spreadsheet, looking at the summary of Amazon, looking at the discounted free cash flow models, and then finally looking at the Buffett-Graham intrinsic value model to see if this is a buy or a sell based on these numbers. So let's go straight into what's been happening over Amazon over the last year. It's still down about 18%, down from its highs of 160 to 109. If we go on the last 5 years, this stock was unstoppable, but we've pretty much wiped out all the gains from the post-COVID boom. Now let's go into the numbers right now. What do we have here? Well, let's scroll down a little bit and we can see the actual numbers here, because we don't want the fluff, we just want the stuff. This is the 3 months ended on 2022 and 21, but because this is the year end, we will look at the 12 months ended here. Firstly, net product sales are up slightly, 242 billion compared to 241, so that is up, but the main driver on Amazon is those service sales, and we can see that services is up around about 40 billion, 271 compared to 288. And if we look at the previous quarters, this time last year it was 70 billion compared to 71, and it is up. So the services of Amazon, the AWS, there'll be a breakdown of that further down. This is the driver. Now, yes, as we said, revenue is up, which is good, but is profit up? Now, how do we get profit? Revenue minus all the expenses. And if we just have a quick look at the expenses over the last 12 months, we can see cost of sales is up, fulfillment's up, technology and content is up massively, sales and marketing is up, basically everything is up. So what does that mean in terms of profit? Well, Amazon this year have not been profitable. 2.7 billion in the red compared to 33.3 billion this time last year. This is one of the first times I've seen Amazon, well, especially for a full year, to be this negative. It is quite sad. But on the positive, if we look at the last 3 months of December 22, they did have a profitable quarter of 278 million. Now, yes, that isn't a lot, but it shows that they have been progressing. If we go to Yahoo Finance and just quickly look at what's happened with it in terms of Amazon's profit, if we go to the quarterly breakdown here, you can see that the previous quarters were down massively, -2, -3.8 billion. So it is definitely a bit of an uptick, but not what we're wanting to see. Next, what we're going to do is have a look at the shares outstanding. Are they buying back their shares or issuing more shares? Amazon have historically bought back shares, but currently they are issuing more shares, 10.117 billion to 10.189 billion. So that is bad, but because the share price is lower at this point, it's probably a good thing to issue more shares. If they're buying them back at the peak, then obviously that's a negative. If they were buying them back in, let me just bring the chart down a little bit. If they were buying them back in March and May, that is quite a bad move because it's expensive. Really, they won't be buying them back now because it is lower, but they are issuing more shares. So hopefully they can use that money that they're raising to invest back in the business and get Amazon profitable again. If we just scroll down here, we can see kind of how the sales are broken down in terms of the different areas of Amazon. Now we'll just look at the 12 months. We can see that net sales in North America is up quite a bit here, 279 billion to 315, but once again is a loss, 2.8. International loss again, 7.7. AWS, the main driver for Amazon, net sales up massively, operating expenses up a little bit, but still they have generated 22.8 billion. This is the driving force of Amazon. All the other stuff they have, if this company did not have AWS, obviously that's a big what if, but if it was just on the shipping sales and the sales like that, it would be a pretty dire strait. But AWS is the backbone of this business, and it is still doing very, very, very well. So let's have a look at my stock valuation spreadsheet here. We've just got the summary first. We'll talk about this. PE ratio, very, very high. In fact, it's probably going to be negative now once this updates, but it's way above the market. Revenue is up massively, which is good, but Amazon have always been a massive revenue generator. Profit obviously down and in the negative, massive fail there. Shares outstanding, we like them buying them back. They're issuing more shares, that's a fail as well. Oh, and my last one, I forgot to talk about it, my favorite one, free cash flow. Well, there's a spoiler there, minus 11 billion. So if we go back to Amazon's earnings here, and we just scroll down and we find free cash flow. Oh, I've lost it again, 1 second. Free cash flow, it's at the top. Free cash flow, decrease of an outflow of 11.6 billion for the trailing 12 months. So that is not very good to see here. You can see here that the trailing 12 months has been down and down and down, and this has been a consistent trend since about 2021. If you see the trailing 12 months here, it did increase up in the second quarter of 22. They're kind of it is increasing, I suppose, in that respect, but still we want to see Amazon as a free cash flow generator. So when we look at the models, and first we'll look at a discounted free cash flow model, it's not going to like the stock if it's got negative free cash flow. And yes, you can see there, actual stock price around about $112 a share, calculated stock price based on discounted free cash flow is shy of $50. So if we look at the numbers here and see why this is the case, well, obviously we know it's because of their declining revenue and their average free cash flow rate. So if we look at the previous numbers, if we were to take averages, it would improve. Revenue is also, analysts are expecting the revenue to slow once again. It's not looking good in terms of discounted free cash flow, but the main driver of Amazon always is the AWS, and that is where they are making their money. We'll also look at the Buffett-Graham intrinsic value model. Now what this is it takes earnings per share with expected growth rates and comparing against P of other companies. And if we look at the growth rate for Amazon, if we take it to Yahoo Finance, analysts have got an estimate of around about 46% over the next 5 years. So analysts are still really thinking this stock will continue to grow, or the company will continue to grow. In the next year, they're expecting over 1,000% growth. I don't know if that'll happen, but over the next 5 years, they're expecting around 46%. So as we see, if we put that into our sheet, we have 46%, and it is negative because of the current negative earnings per share because they're unprofitable. So both models are saying stay away from Amazon right now, but this is a hard time to evaluate with it being a negative stock. Amazon over the last 5 years has been a bit of a powerhouse. If the discounted free cash flow model says it's about 50, the last time it was in $50 a share was back in 2017. I don't think we're going to be hitting that. And if we do look at the stock over the last year, the lowest it's been was $81. It had a good run up and it's dropping back down. So give a comment down below. Are you looking at this opportunity to buy Amazon right now? Is this a good time to buy? Do you think the company is in good state? Obviously in the negative right now. Market's still not liking it. You can see it's down 5% on the day. Is this a buying opportunity? Thanks for watching, and I'll catch you guys next time.